Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 3rd of July. All right, now just following on from Friday, the dollar softer after PCE price index numbers were weaker and consumer spending was a little bit softer as well. So what that does for us is it just takes the edge off maybe how aggressive the Fed is, down the track. Obviously, next month's interest rate or this month's interest rate hike is sort of factored in, but following from that, that's where the data is going to lead us. Now, if we look into the impact of that across the board, equity markets, as you'd expect, a chance for the Fed to be less aggressive down the track, equity markets rallying, and the dollar index sort of gave back some ground. All right, you saw euro rally, even gold a little bit higher, oil back to just above $70, and we're getting a flat line there on the cryptos. Now, just as I go into this, just have a look at the major currency pairs, right? With that dollar weakness, okay, it doesn't change the picture dramatically. It's a bit of a refresh, right? We have seen a number of the dollar block, I guess you could call them, euro, sterling, Aussie, and Kiwi, all come back closer towards levels where you could be looking to get short, right? The Fed still is on a bit of a war path, as Jerome Powell was tracking across Europe, beating his drum last week. Now, key to what's going on in the Asian session here, dollar yen very close to breaking down through 144, right? Now, we've seen a lot of news, a lot of hype around the Japanese finance ministers and Japan in the political scene sort of saying, the yen's too weak, right? Well, you can take that with a grain of salt because we know yen weakness is great for the Japanese economy, makes them extremely competitive globally. But that's where we are. So still focus on this. There's no reason, we aren't hitting extreme levels, so they're not going to intervene at this point. It wouldn't make sense, okay? Because, you don't want to go against the fundamentals. Otherwise, it will just bounce back straight after they intervene. And this is where we come into this week's data, right? It's very important, obviously, the start of a fresh month. Okay, draw a line through June, and we're now heading into the next phase of what the Fed are doing and all these other central banks. Now, if I just scroll down through the calendar here for this week, obviously the key events that we're going to be looking at are the US non-farm payrolls. Okay, massively important, and also the Canadian employment numbers. But there's a whole range of numbers coming out here. Now, I've just gone up here into the sort of two-tier releases. Okay, just focusing on a whole range of things. Now, starting Monday, there is a whole heap of data coming out. Now, don't forget it's Independence Day in the US on Tuesday and also in Canada on Monday. So with that, the North American session is going to be pretty lackluster, I would say, until Wednesday. But that doesn't stop us having a look at the key numbers here. What it means is liquidity may not be as thick as we usually see it, but we will still see key events. ISM manufacturing numbers to start with on Tuesday is a key release. And then you've got the RBA rate decision, 0.25% factored in, but they are the economists, whoever you want to call them, who put in their predictions, it's 16 v 15, as in will they raise rates or not? I think politically it's a terrible thing that would happen. I'm going with no change on Tuesday, right? But it is on a knife edge, right? So we'll have to see how that plays out. ECB non-monetary policy meeting minutes Wednesday, and then you come back down into Thursday. We've got the Fed minutes as well. Now, we've seen the minutes come into play on a few central bank pages this last week or two. So you want to be keeping an eye on that. And then you come into the jobless claims numbers on Thursday. And then we scroll down to Friday. And then you've got the Canadian and US non-farm payrolls. Now, with that US-Canadian holiday Monday/Tuesday, the back end of the week is going to be probably a little bit more hectic, Wednesday onwards. Okay, but the key to this is if I just change this to the low impacting numbers, right, then you will see on Monday, we've got the Tankan numbers. These are, it's probably the biggest number in Japan, right? So big manufacturing number, and that's what Japan is. It's a manufacturing power hub. So that could potentially come into play, especially with dollar yen on a knife edge there on technical levels. You get a lot of home loan numbers out of Australia on Monday, and then you just scroll through. Basically, there's information in each session, or there's data releases coming out that could sort of have a sort of minor impact until we hit the heavy hitting numbers come Thursday, Friday. All right, so that's where it is. It's a start, as I said, of a new month and a fresh approach. Put a line through your previous trading outcomes. You look at the daily outcomes here. As I said, equity is going up. Look for connections with the major currency pairs. Nothing much at this point. As I said, Monday, Tuesday is going to be a little bit loose with the US holiday. And just to give you a bit of backnote on that, when if the traders in the Australian or Asian and even the European session will be taking holidays on those US days, that's when they catch up on their days in lieu. Commodities getting a little bit punished at the moment. And that's where we are. So you can see most traders will be sitting back, waiting to see the technical picture, whether it's the currencies or the equity indices, etc. Just redraw your trend lines to those new levels. If I can just get on that one. So you can start to piece together where the key momentum levels are, and you can start to piece together where the best levels to get in are. All right. Anyway, guys, that's it from me. Pretty busy week. It's always a bit more exciting at the start of the month. Hopefully this month works out a little bit better than last one. All right, guys, have a good one. Cheerio.